Welcome back guys to the video, and this is the Stock Estate, an ex-financial advisor here, and today we're going to be talking about BFT stock, which is merging with Paysafe. Okay, so without further ado, let's jump straight into the table of contents. Today, the first part, I'm going to talk about an update about my previous picks, which is going to be insane. And the second part, I'm going to talk about the bull case for BFT and what are the most interesting factors, that I take into account when looking at these SPACs. And number thirdly, which is the most important part, and I'm pretty sure that most of you come here just for this, is what is my plan, what's my personal plan to trade this stock. And I want you to use this as a gateway, or see how I craft my plan itself, and for you to craft your own plan, because the money that we put into different stocks are different. So that's going to be the table of contents. And for my new subscribers, welcome. Type down in the comment section below what kind of video that you wish to see. For my new viewers, subscribe, join the community of investors who plans for their exit strategy and make decisions based on logic, not emotion. And to everyone here that's watching, thank you for watching. A like button would really, really help out the channel and encourage me to put up more great content. Okay, so what happened to last video's picks? Okay, for my own portfolio, RKT, which is Rocket Companies, which I'm so loving their fundamentals, and as well as the price point they're at, which is at the low 20s. Okay, recently they have been up 7%. I'm pretty happy with that. Okay, I've been waiting for this breakout for so long already, and it finally brings some benefits. Okay, as well as API, API, my early subscribers who have known about this as well. It's one of my more unique stocks that I've picked. Okay, and API was broken up, 11% last week as well. Okay, I recently sold half of my positions when it actually, right before it actually tanked 5%. So I'm ready to load it up more for its further upside. Okay, Baba was the biggest loser for the week. Okay, it was down 6% due to many Chinese government regulations clamping down on big institutions like Baba. So Baba was the biggest loser. Okay, HCAC, which was our quick swing trade for the last week. Okay, we quickly took profits on Friday itself, and I was up 20% before I sold according to the plan. Okay, so if you wish to look at the video itself, you can actually go back to my HCAC video, and you will see that I've actually exited according to the plan, and we have been up 20%. Okay, so now let's talk about Paysafe, which is merging with BYT or BFT. Okay, so looking at the interesting parts is I look at the numbers itself, like the very solid stuff. So looking at its valuation benchmarking, right? Okay, we can see that Paysafe is also quite similar to PayPal, which is like a payment company, an e-payment company. But however, they are more niched, in the gambling sector, the iGaming sector. They have contracts with DraftKings as well. So we can look at the valuation wise. What they presented is, their valuation right now, which is quite similar to most SPACs. Their valuation are pretty low because, after all, they are kind of like a IPO, right? So they are now trading at 16 times valuation, as compared to the industry market at average around 35 times. So what does this say? Okay, so it says that it has a potential to 2x, based on valuation. Just as long as the valuation needs to keep up with the industry standard, right? This stock has the chance to 2x just based on its valuation. Okay, and the next important part I'd like to see regarding the numbers, right, is actually looking at its gross profit. Okay, so the total gross profit for 2019 right, was $909 million. Okay, and 2018 is actually the total is around $749.9 million. Okay, take into account that both of these are unaudited, so I'm just taking what they're saying at face value. Okay, so looking at these numbers, it's a 20% growth. Pretty decent as well, I would say. Okay, not bad for a company. Okay, I wouldn't say that's super awesome. Okay, once it hits around 30% growth, I would say that's a pretty good long-term fundamental company. Okay, but 20% growth is also pretty decent as well. 20% year-over-year growth is pretty awesome as well. Okay, and we're looking at its global platform, right? It's integrated cloud technology. Okay, what I like about this is, looking at the timing itself. The most interesting part is the timing. Okay, so the timing, a lot of these new platform as a service advantages, right, or this software services, right, it's actually going to be released, in the timing of 2020 to 2021. Okay, processing is 2022. Okay, eCash will be 2020, digital wallet 2021. Okay, wallet consolidation timing is 2020, payment processing 2020. You can see that all of them are recently released 2020 to 2021. Okay, and you can expect, this company is already profitable, is already trying to branch out into many different sectors. And with the releasing of PAS, many PAS features like this, I can see that they'll actually greatly increase their revenue, and I can see very positive revenue flow in the further quarters ahead. Okay, and lastly, we look at this chart itself. Okay, what I like, the most important part you need to zoom into is this part. Okay, this area here. Okay, where it consolidates all their three different segments, which comprises of Paysafe, which is their digital wallet, their eCash, as well as their integrated processing. Okay, on average, they are having a 63% profit margin, which is pretty common in the e-payment space because software companies basically have pretty high margins. But okay, I'm liking this number as well, 63%, because it's a little bit higher than normal. Normally 50% I would say is pretty high already. So 63% is a little bit more. It's a little bit more competitive than most average e-payment companies. So I'm really liking this, and this is something good. So that it shows me that this company is pretty decent. Okay, it's not just a trash bag. It's not just a trash company trying to merge with a spaq off the hype. That is just not good fundamentally. I can see this as being a quite solid company that you might want to add on to your positions after the merger, for a long-term position. Okay, and okay, so let's see. Okay, so this is my plan. Okay, so I'm talking to everyone here as a trader here. Okay, so this is my plan. Okay, please, this is my take on it. Do your own due diligence. Okay, this is not financial advice. Although I was an ex-financial advisor, okay, but please craft your own exit plan. Okay, when I was an ex-financial advisor, I would actually sit down with my clients, and I would craft exit strategies with them, or craft their long-term investment plan with them, and it's catered to every single individual because everyone is different. Okay, everyone has a different amount of cash, everyone has different risk appetite. Okay, some people are willing to tolerate at 30%, some people vomits at 5%. So it's different people are different. Okay, we want to collar and tailor each investment or trade strategy according to your individual. Okay, so please use mine as just a guide. Alright, so without further ado, let's look into it. Okay, so let me give you a general sentiment first. Okay, I feel that the overall market sentiment for SPACs is weakening, in my opinion. Okay, everybody's getting very edgy. As I've mentioned before in my previous video, people are very cautious now. So I would say, okay, take advantage of every single small pop. Okay, take profits early. You can never go wrong with taking profits early because you do not want your open profits to turn into a huge loss. Okay, so just be very careful. Okay, and so be ready and be patient, too, and wait for a pullback to the $12 and $13 range. Okay, that's my plan actually. Okay, right now it's trading at, okay, if you can look at it, it's BFT, right? Okay, BFT stock now is actually trading at the $14.61 range. Okay, I'll actually look for a small pullback before I invest in it, looking at its technicals and as well as its general research on the sentiment of the stock itself. Okay, because I would say the pop has arisen, I would see in the future, I can really predict there will be a small dip. Okay, why? Because there's a lot of strong selling pressure based on my analysis, and historically it will pull back a bit before skyrocketing when it sees an actual date that it announced. So we do want a better deal, okay, especially if you're pouring a lot of your portfolio into this. So position size your portfolio. Okay, if you want to put in some now, sure. Okay, but just don't put in everything you want for the trade at once. Okay, maybe put if you want to invest $3,000 for this trade. Okay, maybe you want to take the chance of it actually popping before it dips, right? So you can put in a small position like 1,000 out of the 3,000 you wanted to put in. Okay, so my trade plan for now, right? So enter this Friday. Okay, if it drops to $12 or $13, okay, subjected to market changes, okay, I'll update you guys on the video, and I'll exit half my positions at 25% profits, which is taking profits around $15 to $16. Okay, because I can see that most of the time, right, okay, this is a very safe, okay, most people, okay, this is my own plan, okay, so you can craft your own estimates. Okay, some people can take profits at 10% if you're really scared, okay, or some people can take profits at 30% if you're more ballsy, okay, but for me, 25% is a very nice number that I'm comfortable with, and I can see a substantial amount of profits that I would take. Because you see, right, the longer your investment is allowed, your open profits are allowed to ride, right, the more or higher chance that that this will actually reverse against your favor. Okay, think about this. Okay, this is a very important concept, because the longer you let your open profits ride out, okay, the higher chance that you will reverse and eat away your open profits. So really take profits right now if you can. So for me, myself, my own target is 25%. At 25% profits, I'll exit half my positions. Okay, and last, I leave you with this, right? Always exit with a clear head rather than scrambling to exit, okay? This will lead to less emotion, less stress, and as well as less mistakes when you're doing this kind of swing trades. Okay, yep, and that's it for today's video. I really hope you guys liked it. Okay, please smash the thumbs up button. If you liked it. Okay, it'll help the YouTube algorithm, right, and help this new channel out. Okay, and really subscribe if you haven't, because you can actually request stocks that I want to do my trade plan for. And I'll do my research on it, and I'll actually give you my own trade plan. Okay, and yeah, that's it for today, guys. I hope you have a really great day, and stock and stay out.